everyone, I hope you're doing well. In today's video, we'll be discussing the trade plan for tomorrow's expiry for Nifty and Bank Nifty and a few select stocks which must be on your watch list for tomorrow's trading session. Right before we start, yesterday, the US CPI data showed inflation at 6%, which was on expected lines, and we saw some respite in the US indices and the VIX cooling off. But it seems like a one-day delight, with the global news coming in that the biggest backer of Credit Suisse, which was the Saudi National Bank, it has ruled out financial assistance to Credit Suisse, and Credit Suisse has plunged close to 25% at an all-time low. Even the trading has been halted. The European markets have cracked to a negative of 3 to 4%, and US futures have also dropped. So I think that more risk lies ahead in the banking space, as we've already seen $500 billion being wiped out from the US and now even the European banks. Well, that's to keep you updated. Now, coming back to the Indian indices, here on the daily chart, you can see that the bears have been enjoying the ride for the last 5 trading sessions, and today Nifty has broke the harmonic reversal level of 16,989 on the downside. Now it's hanging at the lower end of the falling channel. Maybe it's just a matter of time that it cracks to the downside. The only question that comes in our mind is that how much lower can it go? So first of all, the slow and steady grind from the top of December 2022 has been really difficult to sail through. And here on the daily chart, if we see, there's a gap zone around the levels of 16,650 to 16,800. And that is where the index can take a temporary pause. Also, if you see over here, since the last 5 days, the momentum has been quite strong. And in such a case, what really happens is that a lot of overhead supply is created. So maybe for every tick on the upside, it can be followed by some slowdown and then finally a hit towards the levels of 16,650 to 16,800. But what if it also breaks down below this? Now, in that case, we can keep the levels of about 16,400 to 16,330 handy on the downside. And if we take a look at the overall open interest chart, where you can see that in the end of the day data, so the maximum call writing is at the level of 17,200, and in today's trading session as well, despite a gap up opening, no follow through was seen on the upside, and the index even broke below the level of 17,000. Now this simply reflects that the resistance level on the upside can be taken as 17,200, or we can even say that the overhead supply is placed at the levels of about 17,200. Whereas if we go back to the chart and see, the maximum put writing is at the levels of 16,800. And as we discussed on the daily chart, that this would be the first zone for a temporary pause, and if it gets taken down, so what will happen is that the put writers will try to defend that level, and the momentum on the downside will get aggravated. And as we discussed, the levels of 16,400 to 16,330 can be kept handy in that case. Now let's move to Bank Nifty. So here on the chart, yesterday we were just discussing the possibility of Bank Nifty tumbling down towards the levels of 38,100, and maybe the trigger is here. So today Bank Nifty has decisively closed below the level of 39,400, which has also activated the bears and given them an upper hand. Now you can also see over here on the daily chart that another pattern has been triggered in Bank Nifty with a decline of almost 1% in today's trading session. And according to this particular pattern, Bank Nifty can actually test the levels of about 37,838, or you can say an approximate of 37,800. Now in case of Bank Nifty, the end of day open interest depicts that maximum call writing is at the levels of 40,000. But an interesting point to note here is that the premium at this strike is almost at rupees 12, which tells us that this strike is being used by the buyers to create more leverage, and overall the trend is skewed towards the downside. So we'll not really refer to this one, and the second highest call writing is at 39,500, which can be taken as the resistance level, and on the downside the maximum put writing is at 39,000 levels. But considering that this strike is at the money strike, it's difficult to deduce any conclusions from this end. So we'll see how the data changes in tomorrow's trading session, and you can keep the levels handy for curating a trading plan. Now let's come to the stocks. So the first one has to be Tata Motors. We also discussed yesterday that it was standing right above the pivot B at 413.05, and it would be a nice shorting opportunity on the condition that it breaks below this pivot at 413.05. Now today it has done just that, and quite decisively it has broke below the pivot of 413.05, which is has activated a trajectory towards the level of 385 on the downside with an invalidation level of about 442. The second one is HDFC Bank. We also discussed in the weekly session that if HDFC Bank were to fall below this particular level of 1580, then the maximum possible downside that I would be expecting is 1540, and HDFC Bank is placed right at the zone of 1540. Now, as we just discussed the global news and a lot from the banking space, so even in case that we see any major gap down or any aggressive selling, so the first reference level on downside for HDFC Bank is going to be the level of 1521. And for now, a maximum downside that I will be anticipating in HDFC Bank is the level of 1472. So do let me know, what do you have on your watch list? What is your take on the markets? And on that note, it's Gurleen signing off. Until we meet again, have a great time.